Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of The Lazy Gap Trader. In this video, I want to show you two trades in particular from the gap trading service and strategy that I put out each and every day to the members of the gap trading service, The Lazy Gap Trader. And what happens is this email goes out to members. This was today's email. We had 7 possible plays. And we always have anywhere from 3 on the low side, maybe sometimes 0, infrequently, but it happens. During earnings season, I don't have enough screen to show you all the ones. I have to actually pick out the premiums and then just give the members, half a dozen or 10 or so. But today we had 7, but one hit, only one hit. So these other ones, Blackstone and UNFI and Deutsche Bank and Prudential and Rio Tinto, these didn't hit their levels of support or resistance today. Therefore, there were no trades. And that's fine. That happens all the time. Sometimes we get 1 or 2 or 3. Sometimes we get none. We never get all of them hitting. It just doesn't work that way. But let's go over to the chart. So Lululemon hit, and the resistance level was 65.53. So let's go up to Lululemon, and we'll see what happened today was the stock opened up, and it kept going. And it was up over 11% today. So you would think, David, how can you trade or how can you short Lululemon on a day when it was up 11%? You must have got killed. No, I'm going to show you exactly what happened. Let's go over to the 1-minute chart so you can see by minute how this trade worked out. Okay, my order was in pre-market, okay? And that doesn't always hold true, but in this particular case it was pre-market because it was trading close to the level. So I thought it would be good resistance and put the order in, and here's what happened. First minute of the day, the stock trades to a high of 65.75. We were off of a level of 65.53. We're out of the money by 22 cents. That's normal, okay? In the email, you'll note that I said resistance will be at 65.53. Stop is 60 cents. That means we're giving it a 60-cent leeway. And the profit target is 50 cents, okay? Now, 50 cents, depending on how many shares you have, could be a pretty good trade. Now watch what happens. That's first minute of the day. Second minute of the day, the stock hits a low of $65. 53 cent profit if we got out at the low, which I never do, but certainly I got out with a 47-cent profit, and that's a pretty nice profit on the second minute of the day. Nice way to start the day. Now, sometimes these particular gap trades where I give you the price level that is support and resistance, sometimes when they don't work out, what I teach members to do and what I do is I put them on a specific and separate watch list. I have a watch list that are gap trades only. And what happens is each and every day when I find the stocks that are gapping up or down in the morning, the ones that I'm figuring out the price levels for members, what I do is I put all of them on a watch list, including the ones that I send to members and the ones I don't even send to members because they're not worthy of the type of scalp trade that we want. But I put it on the list anyway. Why? Because gaps tend to A, get filled, and B, sometimes come into what's called gap window. Let me show you what I'm talking about. So here's a trade that we had twice this week already. Okay? So this is T-Mobile. Now T-Mobile last week had an announcement that they were potentially getting into a merger with Dish Networks. Who cares? What happened is the stock gapped higher, okay? And then what happened after that was I think this was the same day. So same day we came right back into gap window, okay? Our gap window's up here where the stock actually gaps from. And then down here was the lowest number or the lowest level that stock hit that day. So that to me is good level of support because it's the low from the day it gapped up, which means there was support in here. And what happened was the stock comes back down, and we had this trade yesterday. Okay, this trade yesterday was a scalp trade at 39.19, and the next candle hit a high of 39.60. Okay, quick little scalp trade. Today we came into gap fill. What this means is we're closing the gap that was made the other day between the 3rd and the 4th on the gap higher. We came down and we filled that gap today. You see that? Right here to 38.35. We hit 38.35, pierced through it a little bit, 37.92. So we're out of the money by about 47 cents, roughly. And then what happens? We trade higher, and the stock is 38.97. So what this shows you is just because a gap trade doesn't happen on the day the stock is gapping higher or lower, it doesn't mean that there's not a trade tomorrow, the next day, or the day after that. A lot of the gaps tend to work out within a week or so, and you can see that evident here. Sometimes they don't fill the gap for months or years, but the ones that work out within a few days or a week, these are the reason I have them on a watch list. And what happens is if they look like they're not going to work out, and if they start to trade way too far from the original gap, then I take it off the list, and I have so many on the list. I don't want a lot on the list. I can't manage all of them. Sometimes I'll have 150 on the list during earnings season that are going to come back and fill those gaps or more. So I try and keep it narrow. I try and keep it to the big liquid stocks, but sometimes I play the stuff that trades, 300, 400, 500,000 shares a day. I'd rather trade the million shares, but nevertheless, it works. You've got to come see the service, folks. I send this email out every single day, and so far, every single day, there's winners on the list. So I'm handing you potential scalp trades if you're in the scalp trading business and you want to trade that's either into resistance or into support on a scalp basis. I give you the price level, I give you the stop, I give you the profit target, and then I also, from time to time, I will give you the gaps that are filling or the stocks that are coming into gap window in this email as well. When stuff looks like it's close, I'll give it out in the morning as well so you can watch it. So come on over to mystrategicforecast.com/gaps, sign up, get the email for 2 weeks. You don't have to put in a credit card. You don't need anything. Just get the email for 2 weeks, decide if you like it, and if you like it, you'll be invited to sign up, and you can do that. If you don't like it, that's fine. Just ignore the sign-up email, and that's no problem. So I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks, for another episode of The Lazy Gap Trader.